Agree or not? Inflation is making a big hole in family budget. Inflation refers to the rise in prices of goods and services over time, which erodes the purchasing power of money. To beat inflation and protect your wealth, consider the following strategies. 1. Invest in assets that tend to outpace inflation. Historically, certain assets, such as stocks, real estate, and commodities, have shown the potential to outpace inflation over the long term. These investments can provide an opportunity to grow your wealth and preserve your purchasing power against inflation. However, it's important to carefully research and diversify your investments, as these investments also come with risks. 2. Invest in inflation-protected securities. Treasury inflation-protected securities, TIPS, are government securities specifically designed to protect against inflation. The principal value of TIPS adjusts based on changes in the Consumer Price Index for all urban consumers, CPIU, which is a measure of inflation. TIPS provide a guaranteed return above inflation, making them a potential hedge against inflation. 3. Diversify your investments. Diversifying your investments across different asset classes, sectors, and geographies can help spread risk and reduce the impact of inflation on your portfolio. By having a diversified investment portfolio, you may be better positioned to mitigate the effects of inflation on your overall wealth. 4. Consider increasing your income. If possible, look for opportunities to increase your income through salary raises, career advancements, or additional income streams. By increasing your income, you may have more resources to offset the impact of inflation on your expenses. 5. Control your expenses. Monitoring and controlling your expenses can help you better manage the impact of inflation on your budget. Look for ways to cut unnecessary expenses, negotiate better deals, and prioritize essential expenses. Keeping a budget and regularly reviewing and adjusting it can help you stay on track. 6. Avoid keeping too much cash. Inflation erodes the purchasing power of cash over time. While it's important to maintain an emergency fund and have sufficient cash for short-term needs, keeping too much cash may result in loss of purchasing power due to inflation. Consider investing in assets that have the potential to outpace inflation over the long term, as discussed earlier. 7. Stay informed and plan for the long term. Keeping yourself informed about inflation trends, economic indicators, and financial news can help you make informed investment and financial decisions. It's also important to have a long-term financial plan that considers inflation and incorporates strategies to protect your wealth against its impact. It's essential to remember that beating inflation is not a guarantee, and there are risks associated with different investment strategies. Consulting with a financial professional and developing a well-rounded investment and financial plan tailored to your individual circumstances is advisable. If you like this content, please consider subscribing our channel. Thank you.